Amidst being in the middle of the longest government shutdown in U.S. history, the market continues to remain strong on the backs of the Federal Reserve's decision to remain cautious on rate hikes into 2019.
The markets continued their rebound last week, with the S&P 500 and the Dow Jones both up about 2.5%. The NASDAQ was up about 3.5%, and the Russell 2000 led the way up almost 5% for the week and is now up over 7% year to date. Foreign and emerging market stocks were also positive last week, with foreign stocks up just under 3%, emerging markets up just under 4%, and now emerging markets and foreign market stocks are up almost 4% for the year. The chart that we're looking at today is of oil, and oil's been trading for the most part in a range from 2016 until now. If you look at the chart, you can see that oil did break out the end of 2017, but then sold off just like everything else did the end of last year. Now the bottom of the blue box is a support level on oil that's held throughout 2016 and even through the sell-off from the end of December. But where we are now is back to the top of the blue box, which is a resistance level on oil. Now, two things could happen here, and neither of them are necessarily bad things. First off, if the price of oil breaks out above the resistance level at the top of the blue box, that could be good for demand and for the overall global economy. On the other hand, if the price of oil drops from here and actually drops down below the bottom of the blue box, which is the support level, that means that the price of gas could also be going down, which puts more money in the consumer's pocket to spend elsewhere in the economy.
The major news story over the past month has been the government shutdown, which began on December 22nd at midnight, and as of today, January 14th, is now on its 24th day. Now, officially, this is the longest government shutdown in U.S. history, and it doesn't seem like there's any end in sight, as the last negotiation meeting ended as President Trump got up and left abruptly. Also in the news from last week, the Federal Reserve released the transcript from their latest closed-door meeting, and they essentially doubled down from the news from last week that they're going to remain cautious going into 2019 in regards to rate hikes and also reducing their balance sheet. And lastly, bad economic data continues to pour out of China, as they've slashed their GDP to under 6%, which is off from their projected 6.5% GDP growth from last year. And that wraps up all the news from last week. And this week, earnings season kicks off, and most of the major banks report their earnings from last quarter.
Now, as I talked about in the chart of oil, most of the major indices are right at their resistance levels. So this earnings season is going to be very important to see if the markets continue to go up or if we could go back and test those December lows.
Thanks for watching, and we strive to give you everything that you need to know about the markets in 5 minutes or less.
Like our Facebook page and share the video. Thanks a lot.